What's going on, everyone? It's the boy CD's Trades. All right, so today's December 15th. It's a Sunday, and I'm back testing December 13th, I believe. That was Friday. All right, so I had to go to work, so I wasn't able to look at the charts. I was busy. I work in the EMS field, so we had a lot of patients, so I wasn't able to go on my tablet, on my computer, and mark up the charts. So I'm doing it now. All right, so on the 15 minute, I marked up my buy side liquidity and also my sell side liquidity as well. All right, my liquidity as well. So we have buy side here. Price took that. And right here is the new day opening gap on the 12th. This big box right here. All right, so we're going to scale down in the 15. So I see a lot more buy side liquidity than sell side, right? Especially on Friday. So we're going to go look at the 5. Okay. We're going to mark up. So right here is sell side liquidity. Okay. All right. After I marked up the liquidity on buy side and sell side, I'm going to go to the 1 minute. All right, and the 1 minute, before 9:30, I always want to see the new range opening gap that I marked right here. This big blue box right here. So I'm gonna toggle the ET that's in the bottom right corner into regular trading hours. So I'm going to measure from the top to the bottom, or you could do bottom or top. Doesn't really matter. All right, that's 180 points. So I know price is likely want to go over there because ICT said anything above 40 points, it's almost like a guarantee, right? Of 70 to 80% that market wants to go down there. So that probability is very high, right? So we closed down here on Thursday at 414 and we went all the way up here, right? That's where we opened the next day, Friday at 9:30 on Friday the 13th. So price was buying, and a lot of the times price will do the opposite of the real move, right? So if it's a sell day, price will buy in the beginning and then start trending to the sell side at the end. So after I toggle that, I'm going back to the electronic trading hours, and then I'm going to check where price is, right? So before I check where price is, I'm going to look for the first fair value gap after 9:30. So only candle I could start with the fair value gap is from 9:31 until I see one fair value gap, right? If you haven't seen fair value gaps or what fair value gaps are, please go to ICT videos. I trade ICT concepts, especially the 2024 model. It's what I'm going by as of now. All right, so 9:30. Let's go to the 9:30. Okay, 9:30 is trending up. All right, 9:30 is right here. So we can't use this candle at all because it's number one, it's not an FEG, and we can't use 9:30. So from 9:31, we're gonna keep going until we see a fair value gap. So we see a fair value gap. Is it open? Is it closed? It is open. All right. So we have a volume imbalance. So what we're gonna do? We're gonna, instead of just, let me bring it up closer. All right. Instead of just having it right here from this wick to this wick, because that's a volume imbalance, I'm going to add it into it, right? Because it did not close the gap up there. All right, so now I know this is my fair value gap. This is how I mark it. Okay, so price decided to go up, hit it, and bounce all the way up, and that's fine. When you trade, you don't want to have FOMO, the fear of missing out, because you would just be gullible to just enter and market will go against you, right? It will tap your ass real nice. So this is right here is the turtle soup. Price went all the way up and started trending down. but price tried to go up again and couldn't go above this wick to grab this buy side liquidity. That's still not enough for me. I need a little bit more things, right? So this wick right here, where I have this red mark in the middle, that's the CE. So if I grab the Fibonacci from the top to the bottom of that wick, you see how this wick this wick and this body were not able to pass the CE. If the wick went up there and the body stayed below, I would have still said, you know what, we're more likely to go to the sell side because it was failing and couldn't go above that marker, right? That red marker that I have lined up. So price continued going down, and we have all these fair value gaps. It could have been an inversion fair value gap. It could have been a regular fair value gap, and just kept shooting up, right? But I'm paying attention. I'm watching. I'm looking at my fair value gap because of this whole big point that it created earlier, the 180 points to the downside. That's where I'm aiming, right here to the middle, right? I don't need the whole thing. I just need the middle. I'm taking whatever the market is willing to give me. So market went up and went down into my marker. When I looked at it earlier today, I'll say, yo, you know what have I gotten in? The old me before the 2024 mentorship, before patience, I would have definitely got in. Why? Because I see my order block. After I see my order block, also a fair value gap, I would have just went straight into it and got the buy, and that buy would have gave me 55 points. Well, I believe the whole move is like 60 something, 69, almost 70. But I would not have gotten all in there. I would have gotten in the midpoint or the top. So I would have had realistically 55 to 61 points. That's why if I would have got in, that would have been 55 points. The reason why I wouldn't have got in today is because not only because I know what happened in the market, is because my eyesight was drawn to the open range gap, the halfway point of that. So I don't care about all the buy stuff that is happening because I'm looking for the sell side. So price went down and then it came back up, but it still couldn't go past this, the CE of this wick. So once it started shooting down again, then it took this sell side liquidity. All right, it took that. And right here, this FVG is a breakaway gap. All right, breakaway gap. So I don't want price to go there, but price ended up going back there and continued shooting down. Once price continued shooting down, it went to another fair value gap right here. So it's giving you ample amount of times to get into the market, right? It's saying, hey, take the wave. This is the wave for you to go down to the beach and tell everyone how that ride was. So it gave you 1 right here. Then it gave you 2, okay? So, and this is where I would have got in. Why would I got in right here is because when price went back up into this February gap, I could have got in, but I would not have taken that one. I would have taken this one because I wanted to see displacement, right? I just don't want to see price going down and then coming right here back into the very value by just tapping it, then shooting down until my destination. No, I want to see a displacement, see an FVG, and I want to see price go back into it and show me on the CE of this first presentation fair value gap that it could not go past this wick. It cannot go on top. It does not want to take any more buy side liquidity. So price continues shooting down after I got in. So I would have got in right here. I forgot where that thing is. Oh, there we go. This is where I would have gotten in on that FVG, and I would have shot down to my terminus, which is right here. This would have been my terminus. So price continued shooting down, took this sell side liquidity right here, shot down, and gave you another opportunity to get in. Hey guys, this is FVG. Hey, if you missed the wave on top, hey, it's okay. I got another small wave, but at least you're going back down to the beach. So price went back up, could not go past the CE of this fair value gap, and price decided to shoot down into my terminus, and I would have been taken out right here, okay? 2-3 points from the terminus. and then I would have just continued watching. I would not have traded. This was a beautiful trade. There was no news on Friday the 13th. It was just a yellow folder. I think around like 9:30 or 10 o'clock. But at the end of the day, it was not that volatile, but it was very clean. It was a clean setup. Appreciate you guys for tuning in. This is CD Trades.